What is tax? Hello, my name is Too Cute. But I read that if I start a business, I'll have a lot of responsibilities, like paying tax. I must find out more about tax. Come with me, let's investigate. The young Earthlings are amazing! Got their parents involved too. So that's what common contribution means. Taxes are common contributions, just like those. I wonder what you can achieve with all that tax money. Who built these roads? Look, someone even fills in the potholes. Who pays for that? Who pays so that these people keep them safe? They get to learn for free. How come?
Hello students. The topic for discussion today are taxation and tax. There is a clear-cut difference between taxation and tax. First, what is taxation? By definition, it is a system or a method through which people pay their taxes to the government. Some authors will define taxation as the act of paying taxes to the government. Taxation could be progressive, meaning the rich pay a higher proportion of their income as tax than the poor. It could also be regressive, where the poor are made to pay proportionately higher than the rich. Also, it can be proportional, where both the rich and the poor are made to pay equal percentages or equal proportion of their income as tax. Next is tax. Tax is simply defined as a compulsory levy imposed on the income of individuals, firms, goods and services by a public authority. Public authority here means the government. Government imposes taxes on these people we just mentioned in order for the government to have enough revenue to provide social, economic, and other infrastructural facilities in a country. What we have here are the features or characteristics of taxes. The first one here is that taxes are compulsory, meaning taxpayers do not have any choice. As a taxpayer, you must pay your tax. Secondly, all taxes are specific. By this, we mean that the proportion or the percentage to be paid as tax is fixed. Again, taxes are not subject to the element of quid pro quo. Quid pro quo means that taxes are not like prices, where we expect a product that have equal value of the money we paid. Taxes are not. That is, taxes are without requital. We pay money to the government as tax. Sometimes you get nothing from the government, or sometimes we get something bigger in value than what we have paid as tax. And again, taxes have basis and rate. When we say a tax base, we mean that the income or the goods or the profit government is taxing. What government want to tax is the base, but the proportion of the base you pay to the government is the rate. The picture on the right hand side gives us other characteristics of a tax. Here we want to talk about types of taxes. Of course, there are two types. We have the direct taxes and the indirect taxes. By direct taxes, we mean taxes that are imposed on the income of people, profit of companies, and properties. That is, in a direct tax, the tax burden cannot be shifted or transferred to another person. Therefore, whoever pays the tax to the government bears the burden. And some examples of direct taxes include income tax. We have capital gain tax, corporation tax, property tax, and so on and so forth. While the indirect taxes are taxes that are levied on goods and services. That is, in an indirect tax, the tax burden can be shifted or can be transferred to another person without necessarily breaking the law. Some good examples of indirect taxes include tariff, excise duties. Excise duties are taxes imposed on goods that are manufactured locally. We have ad valorem duty, meaning taxes imposed on goods based on their value. The higher the value of a product, the higher tax to be paid, and vice versa. We have sales tax and so many other forms of indirect taxes. And of course, the picture displayed on the right hand side of this screen gives us other examples of direct taxes and indirect taxes. Next we have here is importance of taxes. And of course, some authors will say reasons for the imposition of taxes, while some others will call it advantages of taxes. The question here is, why do government impose taxes on people? We have many. Number one, government impose taxes on income of people, profit of firm, and other goods and services to enable it to generate revenue to meet the cost of administration of the country. By cost of administration, we are talking about, a very good example here is the salaries of all civil servants. So through taxation, government is able to raise revenue to pay the salaries of these civil servants. Again, government uses a heavy excise or import duty to discourage the consumption of certain goods considered harmful, like cigarettes. We may hear that government most times places a heavy excise duty to discourage the production and the consumption of such products considered harmful. Again, the government uses tax or taxes to protect newly established industries in the country from their well-established industries abroad by placing a heavy import duty or duties on goods that can be produced locally. Again, it enables the government to discourage dumping of goods that are inferior or substandard in the country. That is, government uses a heavy import duty to prevent the country from being used as a dumping ground for used goods like used clothes, used cars, used plates, and some other substandard goods in the country. Another advantage or importance of tax is that it enables the government to provide basic amenities or infrastructural facilities in the country. And of course, government uses taxes to bridge the gap between the rich and the poor. And such a system government can use to do this is a progressive tax system, where the rich are made to pay proportionately higher than the poor. Again, taxes are used by the government to control inflation in the country. Here, the taxes government uses to control inflation in the country is a direct tax. During inflation, government increases all direct taxes to reduce aggregate demand, because the law of demand says when demand falls, price will fall. And last I have here is that government uses tax revenue to promote economic growth and development of a country. Here we have canons of taxation. This was propounded by Adam Smith, and in his time he gave us 4 canons. But today, many other economists have changed it to principles of taxation. Let's look at the 4 canons stated or given by Adam Smith. Number 1 is equality or equity. By equality, we mean that all taxpayers, irrespective of your income, should pay equal percentage or equal proportion of their incomes as tax. Here, no favoritism. Everybody, whether rich or poor, must pay equal percentage. If it's 5%, 5% across board. That is equity. Secondly, a good tax system must be certainty, which means that all taxpayers should be aware of the percentage to be paid as tax in advance. Like I put here, it states that the tax rate and time of tax payment should be made known to taxpayers way ahead of time. Number 3, according to Adam Smith, is economy. By so saying, it means that the cost of collecting taxes should be less than the tax revenue collected. For example, the tax revenue to be collected is 100,000. The cost of collecting this 100,000 should not be more than 100,000. Otherwise, it's of no use. That's what we mean by economy. Cost of tax collection should be far less than the taxes collected. And the fourth one here is convenience. According to Adam Smith, it means that taxes should be made convenient to taxpayers. It should not be difficult for them to pay. For example, for income earners, the time convenient for income earner is at the end of each month when they are paid their salary at source. The taxes are deducted. For a farmer, the time of tax payment should be after harvest. To a businessman, the time of paying taxes should be after profit has been declared. These are times that are convenient for this set of people. Number 5, which is flexibility, is one of the principles added by other economists. Flexibility means a good tax system should be made to change with economic fluctuation caused by inflation or deflation. A tax system should not be rigid, otherwise such a system will be considered a bad tax system.